All right, good morning traders. Welcome to the All Markets webinar. This is Bruce at Bookmap. We will be going through live order flow analysis using Bookmap. The goal here in the webinar is to understand the action in the auction process here. How are traders responding? The only way that they can participate in the auction is via their orders. This is an electronic market. So we want to understand their activity via the order flow, and that is the edge using Bookmap. If we can understand their activity and how they're behaving with their orders, that will give us an edge. All right, now this will be combined with any type of setup or trading style that you have. And ask me questions. I can go through them however you prefer. We're still have a few more days left of our, one more day left of our trade control panel here for the, it's the competition, the Blue Jacket competition here. You can win the hoodie, Blue Jacket hoodie, as well as 3 months of Bookmap with data. So the way to participate, and all of you in the pilot program as well as the Bookmap Academy, you might as well just throw it out there onto. Mark up your charts, take a screenshot, take a trade and outline it with your markups, and then just post it on LinkedIn, X, or Instagram with hashtag #FreeBlueJacket, and you're in, just like that. All right. So anyway, yesterday we had the Bookmap Academy meeting. Really nice meeting. If you guys want to attend that, it's every Thursday. And we go through and open the mic for you. We have a process here and give you feedback, let you talk about your trades, and then we can come back in and give you some feedback. The process is pretty simple and straightforward, and we're going to cover it briefly now, and then I'll go through it in a bit more detail during the live webinar here in just a second, though. But the impetus, what's moving the market? We have to understand that. What's the market sentiment out there? What's the news? What are our key levels on our higher time frame? Why the higher time frame and why key levels? Because this is where we're going to get a reaction from traders. And we've covered this before in the past on minor levels, not key levels. We are also looking for a reaction, but it's going to be a lot more muted. It's going to be a lot less traders. When it's a higher time frame key level, we're going to have a lot more interaction from many more traders. And that's what we want to understand. And then we start to build scenarios and strategies around that. Okay, so the time of day, what is the key level? What is moving the markets? And we start to look at, okay, well, if we're moving to the downside today, where are we going to find buyers? Where are they interested on those key levels? Is there going to be a reversal, or is it just are we going to just kind of target those key levels and price is going to drive down to it, and then it's going to chop all day down in those areas? This is what we want to understand. Then we get to our setup. Our setup, you should know it. It should be a checklist. You should know it intimately, basically. You grade it, you determine your risk and your sizing, and then you look at the order flow and get that edge in the order flow here to execute and manage your trades. That's the process here. All right, that process is also included in this pilot program that I put together for you. And the reason being, this is a subset of the Bookmap Academy. And why this is so specific and focused is because after talking to so many traders from many different levels, it was very apparent that they understood the setups, they understood some of the processes, but they didn't know if they had an edge. This is the biggest gap that I've seen between traders. And they don't know the process to create an edge either. And if you don't have an edge, you shouldn't be trading. It is as simple as that. So this program here, we have a structured process that you go through to build out your edge with qualitative and quantitative data. You will build it out. You will use replay mode. It is the fastest method I've seen for building an edge, and it is a joy compared to the grind it takes to go back, not using replay mode and measuring one setup after another. That is a grind. This is way easier, and you collect the data as you're trading in replay mode, and you can speed up the replay mode. That's why it's the fastest process here, as well as one of the best, because you're actually trading. You're actually seeing it, and you're going to get a feel for the price action and the order flow. And if you're interested in this program or the Bookmap Academy, let me show you where you go. Go to bookmap.com, click on the More button here, and then go to Bookmap Academy here under Community. You'll see that, and you can sign up there, or Bruce's pilot program. You click on that, and you can sign up here. Now, you will need to have Bookmap Global or Global Plus. It's included, though. There's no cost. It's included with the subscription, and it makes sense. I mean, come on, you've got to use Bookmap in order to use the replay mode, which is a key tenet of the program. All right, so let's move on here. Action and go through the disclosure, and then we'll look at the live markets. General disclosure: all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Good morning, everybody. Good morning, Owen, Stephen, Alois, Nadia. Thank you, Stephen. You're always so helpful in posting the recording of the live Academy meeting last night. Yeah, and I encourage you guys, like Owen and Thibaut and others in the pilot program. I mean, you guys are already creating great content. Nan as well, others, TD. Many of you in here, you're already creating great content. Nadia, you might as well. Vinfra, God, I mean, the list goes on and on and on. So just copy the link and paste it, or first paste it not only in the pilot program, but also the Bookmap Academy, or LinkedIn or your X or whatever it is account. And then copy that link and put it into the pilot, your spreadsheet for the Academy. And you might as well enter the blue jacket as well at the same time. So, you can kind of kill 3 birds with 1 stone there. And all of this is to help you become a better trader. All right. So anyway, let's jump in here. Let's take a look at the markets and see what's happening here. All right. So I've got the S&P E-mini here. You can see the data here at 8:30. This was the PPI, and this is kind of interesting, kind of setting up kind of an interesting day here. So the we got to look at the bigger picture, but this immediately sold off after a good result. Nadia, this is what this is something to consider in here, like, and put into context in here. Nadia brought up this question about NVIDIA reporting, just stellar earnings, knocking it out of the park, and it drops 5%. Why is that? Okay. Well, we can put this into context in here, and the forward guidance was not good on their earnings call. Okay, that came after the number, and then what's the kind of bigger picture about AI right now? It's overheated. It's been, maybe it's a bubble. So there's a lot of concerns. Look at the Nasdaq in general. It's up, hundreds and hundreds of points over the years here. Or percentages. So it's just been an amazing ride, and AI is a big part of that. So, to see people take some profit and maybe sell some of their positions, is, it makes sense, right? So anyway, Nadia, I called you out on that one, but you've we've got some. It's a great lesson, or a good topic to learn more about this and understand. Like, uh, many traders out there, like, here we understand that in the pilot program, or in the Bookmap Academy, that the numbers, for example, we might get amazing employment numbers with non-farm payroll. However, that's not the issue. That means strong economy. Wow, market should go up. Well, it doesn't. It actually sells off. Why? Because it means that interest rates are probably not going to be dropped in the near future. In fact, maybe they'll raise interest rates, and that's going to temper the market. Putting this all into context, and that's an easy one, clearly, but it's just an example. And understanding earnings reports and calls and stuff like this is also vitally important to put into context. And why am I going over all of this? Because this it starts back here. Impetus, what's moving the market? Okay, we really need to understand this. If you start to understand this and put this into context, this will filter your trading. It'll keep you away from a lot of really kind of silly trades. You might see your setup, but it doesn't make sense in the context, right? So maybe you trade it, maybe you trade your setup, maybe is some sort of context there that's partial, but are you going to put on full risk on that trade? No. I mean, look, do your back testing, do your studying, but put into context these elements in here. It will help you tremendously. You'll stay away from other things that aren't good, and that will preserve your capital for trades when they are good, and when things do line up. All right, so enough said there, and let's jump in and let's cover the impetus, what's moving the markets out there. Well, AI, as we just discussed, it's been really hot. There's worries about it overextended. Potentially some inflation issues coming back in again, with the PPI number being good this morning. Okay, so that's another thing to consider, and the yeah, well, we had the earnings from Nvidia, and we already talked about that, and geopolitical stuff is all over the map. The question is, though, on that geopolitical news, is it moving the market? Okay, what is it affecting? And let's just jump over quickly here to crude oil, and get a feel for that. The other day we saw, we were looking at crude oil, and it was around this 67 level here. Now we're above that level now. Okay, here's 67 right here, the figure. Well, I'm sorry, we're just at it. We traded above it, and we're back down to it now. Are we going to find buyers down here? Is it going to accept above 67? Okay, these are some of the questions that we want to answer. We'll come back and take a look at crude in here and just a little bit later, I think, in the webinar. But and put this into context too. Okay, start to look at the various markets, and start to understand the correlations between them. And what's driving these markets in here? Crude oil is extremely sensitive to war in the Middle East, and other areas where there's a lot of oil production, and that might pull people away from the stock market, and maybe they'll put it's a risk-on trade then for crude oil as it starts to spike. Okay, or maybe they're starting to take profit above 67 here. You see a lot of selling coming in right now in these areas in here compared to the buying. Look at the relative volume in here. Okay, look at the size of these dots, and look at the size of these sell dots over here, buy dots over here. Right. So anyway, these are the things that we want to look at kind of in the bigger picture and put into context. All right, let's jump back to the S&P and see what's going on. All right, so we briefly went through kind of what's moving the markets, the news, the geopolitical, and some other bellwether stocks, etc. Now let's look at some of the key levels. And actually, we can look at Bookmap in here, some of the key levels by zooming out. If you have Bookmap data, and you also have the you put in the continuous contract here for Bookmap data, which is you just type in ES, and you'll see this little circle here with two little arrows on it. This means that it's the continuous contract, and you can zoom out in Bookmap here for quite a bit, a couple of years in here, and look at the order flow and the the order book, how it unfolded over the years here. So it's pretty amazing to see this in here, and start to put this into context too. How? By zooming in. All right, so you can see that most of the activity here in the order book is very close to the current price. Okay, but you can even see when I zoom out here, this goes back to November of 2021, and you can see some interesting areas in here back in July of 24, and also this was October, or let's see, this was April, I know that, or March, end of March, and then this is April in here with the tariffs. And then move to the downside. But look at this high liquidity that stayed in here and got filled in here. And then once we get back up above that area, and this is one of those things we look at in here, once we get back up above that area here, it's been nothing but upside. Okay, so anyway, we'll go through some of these things in the order flow as well. But let's start to zoom in a little bit more. And I just wanted to show that. You will also need to go to settings here and check the box here for experimental dynamic history, okay, if you want to have that zoom out for a couple of years. All right, so again, three things are needed. One is you'll need to have Bookmap data. Number two is check this box. Number three, when you input the symbol here that you subscribe to, just put in like NQ. That's it. All right, or ES, and then you will get the continuous contract. All right, now be a little careful with rollover with the continuous contract, because you'll need to just double check it with the CME contract specs to make sure that you're on, that it loads here the current contract, which you can see it has H6 here after you just type in ES. So we know this is the correct contract. Okay, like crude oil or gold, it will not right now. We're working on it. You will need to input GCJ for the April contract 6, okay, and also J for the crude oil, which I don't think it also will show the current contract with just CL. Anyway, all right, let's take a look at our candlesticks and the daily here on the left, the hourly in the middle, and the 15-minute on the right, and let's go through some of these key levels in here. All right, so number one. Let's look at this daily in here. The key levels are going to be down in some of these swings that we've been talking about earlier in the week that we're looking to kind of revisit. I was pretty convinced we were going to go back down and revisit some of these lows in here, as we saw this big day here on the 23rd, Monday, okay, and this move down, and then this move back up, retracement back up, but it's a lower high. I was really looking for it. I was looking for the move back down into these lower levels in here to find buyers down here. We did not. Okay, buyers came in, they broke this, they came back up into these swings up in here. Okay, but look at the context in here. Okay, we don't find buyers take it. They take it back up here and kind of revisit this area, but not back up into these, the meat of all that selling up in here. Okay, these wicks up in here. All right, so this does not bode well if especially if the follow through the next few days is to the downside, which it is. All right, so we can see that basically we get kind of in a big choppy range in here, and let's continue on. And you can see we found some buyers down here today, back down into those wicks previously in the beginning of the week. Okay, let's look at the hourly in here. And here we can see that some of the gaps in the morning, like the other day here, you see the gap up. And then look at that. Look at those sellers when they came in here. Okay, they came in. This is interesting. Right around 10 a.m. And we look for that during this hour, during the webinar. In fact, the potential reversal after that opening drive to the upside. Look where we trade back into in here. Okay? Look where the selling came in and move this market down. Okay? From this point on, in this hourly chart in here, these sellers are the ones in control of the market. Okay? Buyers came back up in here, but they did not take control. They did not get back up above those areas. So selling came back in again. End of the day yesterday, we kind of see some buyers react to it, and then look at today. Okay, so this is a pullback, and now we're getting continuation here to the downside. All right, so let's take a look further in the 15-minute chart here. Now I'm just going over the basics here because we want to look at the swings and we want to look at the price action. Then we can start to look at the order flow in Bookmap and get a lot more information, because this is lacking in here. We're really just looking at swings and market structure, and candlesticks don't tell you much. And candlesticks with some volume in the the subchart tell you more, but it's really just kind of outlining the broader strokes, the structure, and some of the volume. All right, so anyway, here's the move down, here's the chop. Tries to accept back up. We get the gap back down. Here, kind of funny move here in the morning, the move down here, and then we see a reaction and come back up, and we kind of fill this area in here. Okay, that there was no trading in this area in here. It gapped below it. Now it didn't fill the gap. That fill would be up here, way up here at 69.18 or so. Maybe we'll get there. We don't know. Okay, but we're going to look at the order flow to support one of those ideas. Maybe the gap fill or partial gap fill, or maybe we see reversal around this time and come back down into the swing low for today at 68.41, and maybe we'll come back down and revisit some of these areas down here, 68.30, or even down here at let's just call it 6,800, and we'll take a look, right? And that would be over. Actually, that's 6,800. It'd be right around in here someplace on the daily. Okay, so we would come back down and revisit below these swings in here. Okay, so our 68, 30, 34, that area in here, that would be the next step after coming back down into the swing low from today. All right, so we're going to look at and go through these scenarios in here, and then start to look at how the order flow supports that. Right? Makes sense? That's the process. Okay. All right, Nadia. Unluckily, you don't have you have problems with the audio. Sorry to hear. For the first 30, T. James, that we focus on the ES only. Not sure what you mean by that. But I mean, focus on what you trade, what it is that uh, there's certain markets that resonate better with people with a certain style of trading, or if you're jumping back and forth between some of these markets, you need to put that into context in those correlations. Okay, so for example, that correlation with that crude oil that I was mentioning, and start to understand that. Okay, so we're seeing more selling coming in here in crude now. Okay, now crude oil is going down, stock market is going up. Okay, and just recent price activity here. All right, so start to understand this risk on, risk off, and these correlations in here. You can add in Bookmap, you can add the correlation tracker in here. So just go to your add-ons up here, and the correlation tracker you should see in here. Okay, and then let's add in. Let's remove this, and we'll add in. Oops, kind of an error there. Okay, it's weird. All right, I'm just going to remove that. I'm going to go to my add-ons manager, add it back in. Okay. So, all right, there we go. Okay, this is going to be an ongoing thing. Let's try it again. All right, and I won't try to remove the old one. Okay, and we'll try to add one in here. Okay, and we'll add in crude oil, and let's give it a green. Let's give it a pink line here. All right. Okay. Yeah, so you can see crude was was popping, and now it's back down to kind of where it broke out from. Okay, and let's zoom in here and let's look at the correlation here. Okay, now it always starts over here from the left side. It's you can see that in here S&P was outperforming crude. It was going down. S&P is going up. All right, so anyway, James, you want to, if it depends on what you're trading, right? So take a look and look at the, you'll have to do this gets a little more complex. Okay, but correlations are awesome. I love them, and they just make good sense. You have a relative value between things. However, you have to understand the correlations, and they will break. They will become decoupled from a normal correlation. Things change. Okay, so values change, and you'll have to understand the correlation and the market sentiment at those times. Okay, so like here, the S&P going up, I would look for crude, come back down and revisit some of these lows right here. All right, so here we've got that correlation. Let's take a look at crude then. Okay, what does it look like here? Okay, do I see sellers in here? Well, I see them move down, but I don't see so many sellers here. Not yet. And now they're starting to come in here and here, but I need to see them in here on this bottom edge. I want to see them trade into this and through it. Okay, and then I want to see it break into a new level here. And we might not get it. We might just bounce around in here. Okay, but that's what I'd be looking for. There we go. There's our break. Okay. All right. So there you go. And now, where is this going to go? That was a nice, big, healthy break. I would be looking for taking some profits off of that. This is a quick move, and you know, down into this 65.50 is a beauty. Take that, and then rearm yourself after that. All right, now that means S&P is probably breaking out. Okay, let's jump over here. Let's take a look. All right, so we're going to get a breakout here. This is our top edge in here, and let's zoom in a little closer. Does the order flow support that idea here? So far, so good. Look at the buyers coming in. Okay, now let's see if we can get the skew of the order book here underneath on the bid. I want to see buyers here on the bid, and then I want to see aggressive buyers here with green dots. Then I want to see a sweep of the book higher into 74, 75, maybe up to 78. Okay, let's take a look here. Okay, where might we go? Yeah, 75 looks good. This is a previous swing here. That's how you can hit a single, okay, and take some off up there. 79, 80 up here looks good as well. We have a swing up there, right? So anyway, depends on how you're trading and what your plan is. You have to understand these things, though, and study them. If you don't, you're just gambling. You're just like looking at this and starting to go, oh, yeah, it's doing this, it's doing that, and like, therefore, I'm going to get in. Okay? That's not, that's not back testing it. That's not studying it. That's not knowing you have an edge. That's like going to, the craps table and saying like, I feel good about being a number 10 or something like that. And I saw 10 a few times earlier today, and I'm going to bet on 10 again. Okay, where a better approach would be something like number 7 is going to be the most likely outcome of the dice, and then 6 and 8 after that. Okay, so that's just the reality of it. That's how it is. Anyway, you can put those things together. This is actually turning out to be a real nice move up into 80, guys, and Crude kind of helped us, there on that move. It tipped us off a bit. Okay, now again up here, I would be taking my my profits, my single, and at least put it this way. Let's go through some scenarios in here. Okay, so we got the breakout trade. We started to see this. Boy, where was it? We were right in here, right? And we started to see it build in here. We wanted to see the. Let's just zoom in a little bit more. If we wanted to see. Clearly, we want to see the aggressive buyers. This is what moves the market. Okay, we want to see more of that. We also want to see them on the bid down here, meaning passive buyers getting filled in these areas. Okay. Another thing we want to look for, we talk about a lot, is trap traders. Okay, so like for example, these sellers in here at this little swing, this is a minor swing, we're still in an uptrend here in this time frame. Okay, but look at these minor swings in here. Let's just go through this. Okay, so for example, this is a minor swing. This is a very minor swing. So is this. Okay, and then this is a bigger swing down here. Okay, at this 62. All right, so now what do we have at these areas in here? We're looking for a breakout. We have crude oil breaking down. Okay, we're going to see traders react to that most likely, and we have some trap traders here at a minor level. That's really all we got. We didn't get much more out of this. The buyers just came in and they moved it. Okay, so if you were to put this into a studied setup, like start to look for some of these things, but look for what would be an A+ setup in here, okay, or 9 or a 10 or an 8 to 10, let's put it that way, is to see, I would like to see it come down a little bit further. I would like to see it come down into this zone in here, I would like to see big red dots. I'd like to see them get no traction. I would love to see high liquidity get filled there. And then I would also like to see, as price moves back up, I would like to see high liquidity skew the order book over here, and the reaction to it be aggressive buyers. Okay, that would be an A plus setup for me, along with the correlation with crude, and then looking for that move to the upside. Okay, anyway, there's another thing in here. So we didn't really get much in here. We just got a breakout. Okay, so anyway, we do have something that we covered with non a little bit. You don't really see too much of it here. This was in yesterday's meeting for the pilot program. Is look at the here, let me bring up the pen tool. Okay, look at the liquidity kind of underneath here, and its behavior. Okay, now this is more an added bonus to it. It's understanding the order book skew and understanding the reaction to it. And that's what's really key here, because if we get an order book skew here, but we get sellers hitting into it, and then these guys pulling that away, that's not this is like liquidity that they got cold feet. They don't want to go through with it. They don't want to get filled. Okay, see how they're pulling it in here. So these guys aren't really interested, right? They're kind of trying to push maybe or skew the order book to try to get it filled up into these areas up in here at 80, 82, 83 liquidity up here. This is how you can start to put these pieces together. So you have to look at the context between the two, about the aggressors here versus this liquidity. Okay. All right, now let's see what happened here. Okay, so we dip down, we go below. Now we came all the way to where we broke out from, down here, right? That we're just looking at. Now, are we still finding buyers? Right? Again, guys, this is another way why you want to hit your single and take your profits. And we'll go through a few more in here, examples, but now we're getting more buyers again. Okay, this is good. Let's look for the same things in here, and I would look for them to trade back up to 80, and maybe we can now break out to 82, 83. Okay, so let's look for these things and just kind of go through quickly in the checklist in here. Okay, so what do we see? So we see some buyers come back in. We get a double top here. Look at the buyers up here. No, not many. We pull back. Okay, so now let's see if we get more buyers in here. The book is starting to get interesting. They're on the bid here, getting buyers. Okay, I'm looking for the buyers now to trade back up to 80. And then let's see if we can get a sweep of the order book up into 82, 83. Okay, so let's see if okay, see like we're looking for those buyers. They started to climb up here, and the delta kind of shifted and changed. We're up here again, and we're finding them again. I'm still looking for them to trade higher. The 80 already just transacted. I'm still looking for the sweep higher here. And there we go. Let's see if we can get a bit more here out of it. See how the delta changed though? Like this happens in real time in Bookmap. If we zoom in here, you'll still see the buyers here, right? But when I zoom out, these buyers will combine here with these sellers in here, and these are delta dots. Okay, it's not total volume. It's buy minus sell. So when I combine these two together, that's what we get. There's actually more sellers up here. All right, so just understand what you're looking at in Bookmap, and we saw that unfold, and then it changed, right? So okay, how does that affect how we feel about this? Okay, I would be taking my profits. Okay, and maybe we come back up. Maybe we still find some more buyers in here, and maybe we sweep up into 90, 93, etc. But I will look for another setup for that. Is this making sense to you guys? This is too quick. I'm going over too much. I'm with you. Okay. Trading is life. Yeah, I imagine a lot of you guys are, you know, right along or right along with me here. I just don't want to lose. I want to make sure I'm bringing others along with us too, and bringing us up here. Okay. Yeah, Owen, that's why we have exactly your comment in here. It makes you're saying it makes a lot of sense and is great to see it live from my perspective. That's why we have exactly live order flow webinars here. It precisely so that you can put those pieces together. Okay. All right. Now we continue to go higher here. Crude must be selling off here. No, actually, interesting. Okay, well, crude's back up after this big drop. Okay, guys, I mean, this is my experience in crude. If it gives you something like this, you take it. Okay, that's been my experience. But uh, you know, however you want to trade. Anyway, this brings up the subject I wanted to cover earlier about your managing your stop and your take profits here. Okay. So let's cover that now. And let me see, there's another question by DP. Yeah, I mean, you have to think about it. Like, why is what is the correlation between crude and the ES? Well, you can look it up, and there's websites out there that'll give you the kind of cohort of it across, and yeah, it's typically in general, money will go out of the stock market and go into the dollar or bonds. Okay, or you're saying the 10-year, notes. That's true. Okay, but you'll see times when that isn't true as well. But usually that's the case, right? That's your playing craps, looking for number 7 and 6 and 8 to follow. Okay, and the reasoning is pretty simple. People don't want to put their money into something risky like the stock market. They'll put it into something that is going to give yield and take the risk off. Okay, so now crude oil is kind of similar. If the price of crude is spiking, usually it means could be supply and demand, but I mean, it's always supply and demand, but typically geopolitically it's because of confrontations around the globe. Okay, and it's going to affect the supply. All right, so what does that mean? That means the price of oil is going to go up. And what does that mean for an economy in general that is highly dependent on crude oil? Now things are more expensive. Okay, stocks should go down. Anyway, there's a lot to it, but just make sure that you understand your correlations, and you can put this together into a structure and a cohesive plan that you have studied, and you then God, it just opens up all sorts of things. You can start to trade spreads between these, and you can reduce a lot of risk around your trading. You can also reduce your margin by doing that. Anyway, it's more advanced stuff, but it's also in a lot of cases it's just a lot less risky as well. Let's see, Luis. Oh yeah, answering my question there. Yeah, the Iran news, for sure. Well, I mean, sometimes it depends. It just depends on, kind of what's happening in the markets. Okay. So now we saw kind of, look at the reaction in here with the correlation. This was kind of funny, right? So we saw crudes, spiking lower here, and look how it took until here that the S&P started to kind of reciprocate to that. Okay, so now crude oil has come back up. S&P is still holding here. Okay? Now S&P is a broader market. It's not just one market here. It's not just crude oil. Okay? There's tech. There's you know all sorts of services. There's all sorts of products. So this kind of erodes that correlation in a lot of senses. Okay? There's alternative energy. That's going to erode that correlation as well. Anyway, let's see if we get this move down now by the S&P after trading into high liquidity on the way up. Okay, we're back here to where it broke out from right here. Let's take a look at that. Okay, and let's see if we break down from that. Let's see if we get our sellers coming in here. And where might we go? Okay, well, we already kind of marked up some of these minor swings in here. Here we go. Okay, here's our breakdown. This minor swing I like here quite a bit. We just traded to it. This is the point of control in here. Okay, for this profile in here, for the price action within this viewable range in here, this is the most traded level. All right, so I would be looking for a move to there and then take some off, or move your stop and manage your stop. Okay, because we'd look for that move to that most traded price level or fair value in here. And now if we zoom out a little bit, you can see the bigger move. This is a bump here. Let's actually put the POC on here. Okay, and it's down here. It's at this level here. It's below all of this price action. Okay, guys, I'm going to start to take some of these lines off the chart here. I don't want to get too convoluted here with some of this stuff. I'm going to try to keep it simple. It's fascinating stuff, especially if you are interested in spread trading. Then it opens a lot of doors for you, you would be interested in those correlations, no question. Okay, here we go. More sellers. All right, so now can the sellers drive it through this area here and back down to here, like this next swing here, 67, or maybe down to 62? Okay, now let's take a step back. I like this idea. Let's look at our bigger picture here. Okay, so here's our 15-minute chart over here, and we were talking about this at the beginning of the webinar. Maybe we just kind of come up and find some sellers, filling this kind of area in here, and then the sellers come in, and then we trade back down to the swing lows of the day, okay, or down to swing lows from the other day into this kind of 68.30-ish level here. Okay, so I like this idea. We gap lower, and I don't see a whole lot of momentum in here to the upside. Okay, this is different than some of the other days. Okay, first stop we have to get down to this 62 area though. Okay, do we see this? See the big red candle? Can we see more red dots in Bookmap to drive price to 62? Yeah, not bad, not bad. All right, so now let's we're trending lower. Okay, now you can see we're still kind of caught in this kind of value area here, and we need to break that and start trending again down to 62, 60. All right, I'm going to clear the drawings here, and let's draw up some new things in here. Actually, I'm going to also go to the heat map settings. This is the default here. I'm going to kind of filter it a little bit and just kind of look at some of the areas of high liquidity in here, and I'm going to dim it as well. Okay. All right, here's why. Because I want to look at the price action here, and I want to look at that and the structure, okay, and the volume within it. Right? Because, you know, we've already moved lower. Are we going to get a continuation move lower? And I need to look at these. I need to look at the price structure, see if it breaks and if it breaks on volume. I also need to see if there's high liquidity passively getting filled in here on the bid. And there's some. Okay? And you can see we're kind of just in this back and forth in here. And now we're starting to see a reaction by buyers here. And we did break the structure. Now we broke this diagonal first, okay? And now we broke this one here, and now this one here. Okay, so and we broke it on by volume. Okay, so well maybe then there's enough buying pressure to come back up into 78 here. And pull back maybe to here, 73, 74. Let's see if we get our cluster of buying here. There they are. Let's get a little bit more. There's some selling. Okay, now let's see if I get our buyers here, and then a sweep of the book up into 78. Okay, maybe 80. But 78 is where the liquidity is. That's our first stop. Okay, they're on the bid here. Now this is our context. See, they're on the bid here. What's the reaction? Buyers. Okay, great. Now 78 has transacted. Let's see now, get a bit higher here. 80 here. Okay, this is our low volume pullback in here, guys. This is our continuation pattern in here. And that's what we're just kind of outlining. And pilot program, guys, as you know, like in the next, in about a week or so, I plan on delivering that those replay files and criteria for you. Was this a trend line break and accumulation? Not really. I don't see the accumulation in here. This isn't a major reversal. It did it. It broke the structure. It broke it on aggressive buying in here. But there wasn't the passive accumulation in here. Okay, we need both. We really need that passive accumulation in here. Otherwise, we might get enough aggressive buyers and we'll trade back up here and maybe make highs of the day. We might. Okay? But if we have this behind us, that passive accumulation on at least 3 levels down here, it makes this move a lot easier. We need all 4 elements in here for that, though. Passive accumulation, it needs to be an important level, which it kind of isn't, right? You know, so that's detracting from it as well. But we did get the breakup structure and we did get the aggressive buyers. Okay, so we're not really looking for too much out of that move, right? Because there needs to be the context in here. We don't have this as a foundation down here. It's just kind of a knee-jerk reaction with some aggressive buyers coming in. Okay, see how, I mean, we can look for a move, but you'd be pretty quick to take your profit or move your stop up. Okay, uh, and give it a shot. It's not like a 9 or a 10 here. Okay, it's not an 8 really either. This is more like a 6 or a 7, if that. Right, and that you'd filter that out then. So you know, reduce the stress and the anxiety and your energy. Don't take that trade. Hey, here they are again. Buyers back up here. Now, did we get any passive accumulation in here? Not really. No. So yeah, it might break out. Looks like it. Looks like it wants to do it, but I don't like it. I want to see more passive buyers here. I want to see at least sellers on the hook in here. There's some. So we'll probably get a stop run here to the upside. There we go. I want to see a bigger one than that. Maybe up into 83. Guys, this again, you know, kind of looking for some feedback from you on this. Am I covering too much? Is it too quick? Uh, is it not making sense? Is it confusing? You know, we're here. Owen kind of nailed it. You know, we're here to go through a lot of different things, but to look at the live market. So I need to cover a lot of different things because of what the market is giving us. You know, it's not always going to give us something that is, um, you know, a perfect setup. Usually, it doesn't do anything near it. And we're still covering these concepts. Okay, just look for something better for putting risk on. Let's see, questions over in YouTube. How can you make out the passive buyers are helping price go up? Well, it's a great question. All right. So typically, let's just go through what we see in the market. What's the market made up of? The market is made up of orders. And it's the traders or the actors participating in the market. Now, there's a few different ways to participate. And one of them is by providing liquidity with limit orders. So these are limit sell orders up here. Okay, 131, 125. These are where the majority of the sellers are in this current price action. And now look at this down here. See, these are limit buy orders here at 68.80. Okay, 120 or so. So this is what makes up the market. This is liquidity. Now, the aggressive buyers, the green dots, the red dots, these are market orders. Okay? They take liquidity. They just trade it up into the 68.84. Right? So this is where these buyers, aggressive buyers, charged up and met the sellers up here. And the transaction took place. Look at what's going to, a very simple question of like, what's going to stop the market from going higher? And this is not trying to get tricky or anything like this. In fact, we're getting down to the fundamentals, okay, the market mechanics. Okay, this is how the market works. So what can stop the market from moving is a few different things. Maybe there's no interest in trading at all. Okay? Or maybe there's a ton of supply up here, and we trade up. We see the aggressors, which are the market buy and sell orders. The aggressors trade up into it, but they can't get through it. So they absorbed all of that buying pressure up here. And we don't find more buyers. And if we don't find more buyers, we're probably just going to kind of chop and go sideways. Or we may even get a reversal. We may find sellers at that point and trade it back into the range. Okay, this is why we want to understand the passive transactions. Okay, because these are where the sellers are, and if we trade up into it, we know that these are sellers up here. And if we don't find buyers that are willing to go higher, and we're starting to find the opposite, we're starting to find aggressive sellers, which we are, I would look for them to break and trade back down to liquidity on the bid. Okay, so because we're not finding buyers. Okay, the buyers are down here. That's where they're willing to buy. Okay? We have sellers driving the market down to those buyers. That's what's happening. This is supply and demand. Okay? Now, I would recommend that you go to bookmap.com and then go to education. And this is free, right? Understanding order flow, market mechanics course right here. Go here, click on it, watch at least part one. Each one's about an hour long. You know, we go through all of this in here. So you understand what these things are. You understand an order book sweep, a liquidity taken. In some of these diagrams in here that go through and simplify what you're looking for and understand the market mechanics. So, you know, is it a surprise that we traded back down into the levels we just talked about here? No, it's not a surprise. Okay. Now, look in this context in here, it's back and forth. I'm finding actually there are some aggressive buyers now down here. Okay, great. Now, can they break the structure? Can we get buyers up here at this level? Okay, now, if we do aggressive buyers, just green dots, let's actually dim the heat map. If we get aggressive buyers up here, they might break it. They might come back up to here. Okay, you know, back to 83 or so. We don't know. But what if we have a lot of passive buyers in here in the liquidity heat map? And then what if we don't find any more sellers willing to take this lower? And then we start to kind of curl around and we start to see aggressive buyers come back in. Okay, big green dots over here. Okay, well then we start to look for them to trade to break the structure here and trade back up to other structural areas. But we're also targeting high liquidity on the offer where the sellers are. So this is how we see a reversal. And we start to see those buyers, aggressive buyers, come back up and transact with the passive sellers. All right. Okay, as you can see here, now we'll turn on the heat map here. Let me clear the drawings again. Let's turn on the heat map and get some better insight here. This is why, you know, Bookmap is valuable, is by understanding that context. Because if you don't have that context, you don't know where the buyers and sellers are, you're just kind of shooting in the dark. And you're, especially if you're just looking at volume in here, you only have half the picture. You don't have the other side of the trade. And we want to understand that context. You know, you see it so many times. Like, look at these buyers up in here. They trade into this high liquidity up in here. Okay? And we're looking for that move, those sellers to come in and just move down to here, into these areas, and they did. Now they just broke through that area. Okay, so maybe they can trade back down to more liquidity on the bid. Where's that? Well, now this is where it gets into your higher time frame as well in context. Where is the higher time frame liquidity, and are the sellers really driving that price down? Well, contextually, we're making higher highs in here. We just made an equal high here, so maybe we need to find those aggressive sellers though. And we just had to move down, and you can see it's really kind of back and forth. If we get the aggressive sellers though, I'm looking for them to make an equal low, or maybe a little bit lower here to this liquidity at 65. All right, again, let's take a step back and take a look here at our higher time frames. I mean, this gap down is not good, and we're not filling it. Okay, so this in the bigger picture, this is bearish. But we may get a short squeeze in here on Friday. This happens all the time on Friday, especially, and kind of the market just grinds higher up to fill the gap later in the day, and then sells off. But we don't know, right? But we're going to look at the order flow to support the idea, okay, and go through understanding that market sentiment and the impetus, what's moving that market, okay, and then where key levels and scenarios. Okay, so now look at these scenario here, and look at this is really back and forth in here. Okay, sellers, buyers. Okay, green dots, red dots. Actually, there's quite a few more green dots in here, and this is where they moved it. Okay, so from these points in here, this point here, they are in control. Buyers are still in control in this small time frame. All right, so now what happens if we can get down below these buyers here? It's going to be like a nice squeeze to the downside. I would look for the sellers to come right back down into where these buyers came in, swing, and the liquidity down here, 66 and a quarter. Right, so we would have these guys in here be the fuel for that fire as well, or for that move. Now that's a scenario. Okay, we might get the opposite scenario. Buyers still in control. You can see we traded back down to this area here, and these sellers in here, they are the fuel for this stop run and this move higher. And there's our stop run right there. Okay. Now this is where, like we were talking about earlier, and answering Pradeep's question here. The what's driving this price action right here are a lot of trap traders. This is what it looks like to me, and I can verify it with this stop run here. So this back and forth in here, sellers in here, sellers come in again, and they just got stopped out. Okay, now that kind of price action, Pradeep, it's really, this is what fueled it here, selling, the selling. Okay, now let's clear the drawings again. This is why we want to understand and rely on, it's easier to rely on this. Where is the passive liquidity getting filled? Okay, and if we see a lot of passive liquidity getting filled in here, and then we see kind of back and forth in here, and maybe we have some upside down sellers here having to cover, and you get your green dots in here, we've got a lot more on our side to let this run. Okay, now we don't have that scenario here, so I'm not looking for a bigger move. Okay, now again, in this time frame and in what we're seeing in here, and that's a big question for yourself. What time frame are you trading? Oh, was a 1045 a valid um, TLBR? Um, it's not bad. Uh, it's not. It's not really that great either. Uh, this is pretty choppy in here. Looking at our higher time frame here is going to help of what we're looking for, right? Because on days like when this is pretty strong buying, right? Pull back, strong buying. And so on days like, or when we see stuff like this is the context we want to understand up in here. And this is good. It's good to see that there's high liquidity in here. We have to kind of zoom in here and see if it really transacted as well, which is a big question. And did they pull or did they stay in the order book? And we get, kind of a combo of both in here, right? As you can see, right? So yeah, it's kind of a combination in here, and that doesn't really give me a good feeling, understanding that. And do we have 3+ levels in here? 1, 2, yeah, it could be if they transact, and then the now this isn't the classic setup that we're looking for, right? Up in here. So is it a key level? Yeah, it's a minor key level. Okay, it's not like a key level. Like this would be a key level up in here, right? This would be a key level in here or down here. And so for the day though, you're looking at kind of these minor levels in here, swing highs, etc. Now the swing high on a on a move like this here, it can be just a pullback, and then we get the momentum coming back in to the upside, right? So it's a little more challenging. Now that said, it depends on the time frame that you're trading. That said, like you can see that this did work out, and your what is it, not anticipation, your expected move in here though is going to be muted. Okay, you're kind of going against the trend, and I'm not really seeing the you see some of the sellers coming in here. That's true. They do break the structure in here, but where are they going to go? That's where you line it up with your liquidity in here, and also line it up with the market structure, and line it up with some measured moves in here. That's at least what I like to do. Okay, so this move in here should be equal. Okay, and yeah, so maybe down to this swing or some of this liquidity at some of these lower levels in here, and it did it here, right? So my expectations for this are muted. I would be taking some profits in here, or at least moving my my stops down pretty aggressively, right? I didn't copy the drawing, Nadia, so I just redrew it and then moved it. Okay, so let me see here. Yeah, we'll take a look, Armando, at gold here. Okay, thank you, Vinfra, for the insights. Or it's moving a bit too quick. Yeah, I mean, really, this is kind of it's important to cover this in here. That you guys, you want certainty and build confidence. And if things are confusing, stay away from it. Okay, just take away the things that align with you and give you that confidence and that certainty. So, I mean, you can see, like, to answer this question, from oh shoot, where was it here? Oh yeah, from T James. See how my expectations for this were muted, eh? And you know, I'm not looking for a big move in here, okay? But I do have some things on my side in here, and that's what we're looking for. When it really comes down to it, just we're looking for things on our side, and that is a higher probability trade. Okay? And that comes through backtesting, from studying, from understanding the context between these things and putting those pieces together. It's not double talk. Like, I'm not looking for a great move out of something like this. Okay? And I would be pretty aggressive with my management on this. Okay? Now look at the buying coming back in again. Now this is getting interesting in here. Okay? There's a lot more buying than there is selling. Absolutely. Look at the volume dots, look at the bars. What about the structure? What's the structure telling us? Higher lows and higher highs. Now, how is it doing it? Okay, not by much, right? So this move in here, okay, yeah, I mean, this looks good so far. I would expect this from here to move up to about here. That's about it, though. And now maybe it comes back up to the swing. Maybe it breaks out. Maybe it goes to 6,900 up here. Okay. And now what do I have behind me in here? Where are my buyers, passive buyers? I do have a few things though, okay, on my side. Okay, this is where those buyers came in. We already retested here and we found more buyers again. Okay. We have all that passive liquidity up here filled. I don't find the passive liquidity down here filled. Okay. Now, so what does that mean? Okay, if buyers are in control from this on this small time frame, okay, and I don't have that passive liquidity in here, then I'm looking for a stop run to the upside. Okay, so I would be looking for some sellers in here, lack traction, buyers come back in, squeeze them, and hit up into maybe here. Okay. Now let's see if they can do that. Let's see if they can do that right now after a few rotations. Here are buyers, and love to see the bid down here. Well, that's not helping too much. I want to see it up here. I want to see the reaction to that bid as be buyers here. Okay, see the shades in here, kind of the context we're putting together, and kind of building this out in terms of order flow to look for an edge. Okay? And now there's our move, right? Now again, like, what is going to drive this move in here? Well, I think it's going to be some of the trapped sellers in here. It might be more buyers coming in. It might be. And at the moment, actually, I think it is. But I would be very leery about that as well. Because those buyers, what if we get down below here at 80? And see, these guys are vulnerable in here. Okay? They're vulnerable because if sellers get down below here, they're on the hook. They're going to drive price lower. They're going to get squeezed. And then we'll see what happens if we get down into here. Now it's a 75 or so. So that's why I'm not looking for much out of this move here. And these things, once some of these scenarios and the things that I'm going through in here, we will go over again and again and again. And it'll be, they're going to be the same elements though. It's not going to be double talk. It's just going to be the same things. And you're going to go through the same process in here again and again and again. Well, I have this, I have that, I don't have this. Okay, I'm not looking for much. And you're going to be able to do that very, very quickly. Right? And your expectations then are going to be muted for moves in here. And you just might think like Vinfra says, it's kind of late. He's kind of tired. He woke up at 6 a.m. Madrid time. Do you really want to put some risk on at that point then? I mean, it's got to look really good. Otherwise, you're going to be burning your time and you're going to get frustrated. You're not going to be focused. And maybe you shouldn't be trading then. Okay, let's see if we get follow through on this move to the downside here. See where the buyers came in. Now, would love to see, again, same ideas. Skew in the book on the offer, reaction, sellers, and then hit into, well, the swing first, but maybe a bit lower. Okay, and again, what's driving this in here? This is price action driven from squeezes. Okay, we already have one squeeze here. We can see that here's our short squeeze. Here's our long squeeze. Okay, I think there's still some more juice left in it if we can get down below here. All these buyers are going to be like, uh-oh, and running for cover. And it happens all day long. Okay, even on trending days, it happens. It's just more muted because it's kind of that kind of price actions in the background. It's happening, but it's driving maybe some of the price action, but it's not the main driver. We have other things that are the main driver in the fundamentals. Would time frame selection be relative to volatility during the day? Armando, this is a really it's kind of a convoluted question, but like I know what you mean here, and trying to I emphatically yes. Okay, the time frame and the volatility typically go hand in hand. Okay, what are we coming up on right now? London close or European close on a Friday. Okay, so looking for this kind of stop run to unfold. It may, if you're in London and you're closing the books for the day in here, you're probably going to be selling this, right? Okay, so then let's look for that scenario. Now we see these buyers on the hook. Do we have fuel? Yep, we sure do. Let's see if we can get sellers come in here then and start moving this price down to some of these lower areas here. Okay, I'm not seeing that scenario right now, so I stay away, step aside. And again, it's hard to be honest. It's kind of hard to sum up the larger players. Who knows what they are doing on what time frame? Are they hedging? Are they covering? Are they, you know, um, uh, uh, trading spreads? What is it? And that's harder to determine. It's a lot more complex. You know, uh, so what we can look for though is like some of the squeezes though. That can be a good short move to take advantage of. Short time frame move. All right, guys. Well, let's see. It's over the time limit here. Thank you all for coming. I'm gonna actually be away next week, but I will also be putting together some materials for you guys in the pilot program, so that the week after we'll be able to hit the ground running. All right. So I'm really looking forward to that. Okay. I can't tell you how much it means to me to put these materials together for you guys and offer this. I really need that focus time over here, and I should have some time for that. All right. Anyway, thanks for coming, everybody. Hit the like button over on YouTube. Come on over to our Discord channel and partake in the community. We have all sorts of free resources in here, including the Bookmap Academy and the pilot program. You will need to have Bookmap though for that, and take it further from there. No costs involved though. All right, thank you everybody. Really great to hear the feedback in here. All right, so yeah, we will see you the following, not next week, the week after, and like I said, we're going to hit the ground running pretty hard. We'll have a lot of stuff to go through, and focus even more on some of the kernel of your trade that you're looking for, and to just cut away all of the other noise. It's a really important part in that pilot program, and it's necessary. In fact, I instructed the coaches to, if you guys post in there, anyone posts in there, and they're new, that they're trading in the live market, or they're adding indicators, then you're not doing the process right, and we're not going to give you feedback on that. We can't. It's a waste of time. We need you to, you want to be a part of the program. There's like some guidance there, and adhere to the guidance. It is there for a reason, so that you can be focused and not distracted by all of these other elements in there. It really is taking a very, very long route if you become distracted. Okay, so focus it's really important. You can ask any of the coaches about that. We're happy to support you on any of that, because that's one of the first things to learn, is to take things away from the market, okay? And wait, be patient, look for something specific that and that's how you build your edge. I put in there too a really, I got to end this with, in fact, I'll share it with you guys here. I have the link for it. I just watched this the other night. It was one of the most inspiring things I've seen. Relates completely to trading. And that is this documentary film on Tony Hawk, the skateboarder. And just watch the first 5 minutes of the movie, and it's just unbelievable. Like how this is, and he's at the top of his game. He's already the number one skateboarder in the world, basically, and doing amazing things. And here he is practicing a move over and over and over again and falling. And not just falling, he's really falling hard. Just watch it. It's just unbelievable that this poor guy is like hitting his head, slamming his body. And he's taking, he what does he do? He gets up, walks back up the ramp, and does it again and again and again. And it hurts. But this is greatness, you know? And what we're advocating in this pilot program as well, it's the same thing of just you've got to do it again and again and again and build out the reps, build out your skills. You will also be building out data along with it. So you're going to have all of that. You're going to be building your experience and your confidence. You're going to know what the setup looks like. And they're not all going to be winners. Okay? But you will start to filter and find those really great trades and build some confidence. And it, yeah, I've got to show it in here. It was just so inspiring. Watch the whole movie, watch at the end, and they talk about it more. I mean, the poor guy is getting concussion. I'm not saying it's smart, and he admits it, that it's concussion after concussion. And he's broken bones, he broke his pelvis, all sorts of things, and he keeps at it. This goes along with Kobe Bryant, and sports is easy. Right, the analogies are very easy. Whatever it might be, they're always practicing. Okay, they're always striving to do better, and we've got the program for you. It's here. So go through the program and start building out your edge in the program here, and we'll take it further. I'll post it in here. Let me find the link quickly for you, Vinfra. It's over in the pilot program. You'll see it. But here, I can also find it in here. Hold on just a minute. It's easier to go in the pilot program and go over there. Yeah, you'll see it. It's only 4 minutes, 5 minutes long, something like that. Okay, you'll see the link though, and watch it. And just watch. He's there by himself with just a couple of people filming him, and he's doing it alone, again and again and again, and he's falling and getting hurt, and getting back up. There you go. Thank you, Stephen. He posted it in there. Getting back up, walking back up the stairs, trying the trick again and slamming himself again. It's amazing. And this is how trading is, I feel. Anyway, guys, thanks for coming, everybody. Have a great week. We will chat with you the following week after that, and really hit it hard here. All right. Thank you, everyone. Have a great weekend and a great week. Bye-bye.